Hi and welcome to Finance Freedom Money Tips for in your 20s. So taking charge of your finances is often low on the list of priorities of most people in their 20s, and that's completely understandable. For most at that age, you're far more interested in spending time with sort of friends, your girlfriends, boyfriends, studying, finding work and travelling. But tackling your finance early might sound dull and boring, but getting on top of your money early can really make one hell of a difference later on in your life. Try to bear in mind what ahead for you. You may still be young, but you're no longer a child. You have most likely already encountered debt, perhaps in the form of a student loan or credit cards. Therefore, understanding what products and services are available to you will better prepare you going forward, helping you to ensure you manage your money properly going forward. In this video, we put together a collection of simple tips that anyone can follow, particularly if you're in your early 20s, looking now at your future and how you can sort of build yourself a sound platform and ensure your financial stability going forward. So at number 1, get your banking sorted. If you don't have one already, get a current account opened. Don't be afraid of going online for the best deals, particularly if you don't plan on using sort of branch networks. Then online offerings are absolutely fantastic. You can get complete banking services provided without ever having to go into branch nowadays. So most accounts should offer you at least a free card along with an online facility for you to manage your income and all your expenses. Consider using a credit card to build up your credit history, but only spend what you can afford to pay off each and every month. And importantly, set up a direct debit so you never miss a payment. That will really help going forward, so you never have to remember to actually make that payment. For simplicity and ease of management, think also about keeping all your finance products within the same financial institution. Number 2, get used to savings. No matter what you're earning, get into the habit of saving. Even if you think you're not earning enough to afford to save, there are plenty of ways to reduce your outgoings which can help you to actually save each and every month. We have another video on the channel that will talk you through essential tips on how to reduce your outgoings on a monthly basis, so check that out. It's important to set some goals and stick to them. Set up a standing order for a fixed amount to be paid into your savings as soon as you get paid. Number 3, use the help that is available to you. Just about all banks offer online tools to help you manage your money. There are plenty of apps available which will help you keep on top of how you are spending and how much you are saving each and every month. So do use those apps, and remember security. Always use long unique passwords and keep them safe. Number 4, build a strong credit file. A good credit score is important if you ever wish to borrow money to buy, for instance, a car, a home, or even a business. Poor management of the money that you borrow, for instance, failing to make repayments on time, will result in a poor credit score. This will likely make borrowing money in the future more expensive, difficult, or even impossible. Keep your credit under control. Track the charges and make your repayments on time. As I said before, if it requires setting up a direct debit to take a payment automatically, then make sure you have that in place. Then you don't need to worry about making sure you make your repayments. If you have borrowed money, make sure you have a repayment plan in place and stick to it. If you're unable to ever make your repayments, then do contact your lender early. Leaving it will only result in additional charges and potential credit problems going forward. Number 5, it's never too early to think about retirement. The sooner you start saving, the more you will accumulate and earn through interest. So as I say, it's never too early to actually start paying into a pension scheme. Make sure you include pension contributions therefore into your budget, and you will reap the benefits again later on in your life. Number 6, insure yourself. Buying insurance can seem expensive, however, you need to consider the implications of not having cover in place if the worst happens. Take advice. Consider the effect of an accident or illness on your ability to meet your commitments and cover your outgoings. and range insurance to support you should you be unable to work and meet your medical bills. As a young adult, rates are often cheaper than you would expect. So do your future self a massive favour. Take responsibility for your finances. It will definitely pay dividends in the future. So buying a car, a house, or pretty much anything will be so much easier if you have financial stability. You can ensure you get this by taking action now.